down. We're seeing some rent prices coming down. So we think inflation is going to surprise on the low side of expectations for those reasons, and because innovation is inherently deflationary. And our 5 innovation platforms are all driving different kinds of deflation, good deflation, which will cause unit growth, but deflation nonetheless. So we think the Fed is going to have many more degrees of freedom in the second half of this year than most people think. We could see more than the number I just suggested, 2 to 3.
Hey guys, welcome to Everyday Finance. During this conversation, Cathie Wood, the founder and chief executive officer of Ark Investment Management, shares her thoughts on the potential of Bitcoin as a transformative asset. A further point that she brings up is the ongoing trend of people becoming more interested in cryptocurrencies. As the Federal Reserve continues to make adjustments to its policies, Wood discusses the ways in which possible future trends could be influenced by Fed rate cuts and overall support for cryptocurrency. Specifically, he focuses on the ways in which these factors could support cryptocurrency. Her statements shed light on a more widespread optimism regarding digital assets, in spite of the turmoil that has been taking place in traditional markets, as a result of the fact that alterations in monetary policy may have significant repercussions for the cryptocurrency market. Investors are keeping a close eye on the cryptocurrency market. Watch the clips.
So one of the things we think is going on right now is, and Treasury Secretary Bessent today said he does not believe that we're going into a recession. We think we've been in a rolling recession and that we are actually going to see some negative quarters here. And that's because the velocity of money is collapsing as people, the labor force is worried that, and we're talking about federal, state, and local, quasi-government categories like education and healthcare. There's a lot of fear around job security right now. So we see the saving rate going up. We see the velocity of money coming down, and we do think we'll see 1 or 2 negative quarters. What we believe that will do is set this administration up and the Fed up with more degrees of freedom for tax cuts and perhaps lower interest rates, or at least ending quantitative tightening. Well, we post our trades every day, and you'll see that we've been buying Tesla and names that mimic Bitcoin and other crypto assets like Coinbase, like Robinhood, taking advantage of this risk-off period. Well, we tend not to be very short-term in our focus, but if we're right and inflation is going to surprise on the low side of expectations, we wouldn't be surprised to see 2 or 3 cuts. Now, if you look at an indicator called trueflation, it's probably the broadest measure of inflation out there. It is saying inflation is down to 1.65%, well below where the Fed is pinning it at roughly the CPI's 2.8%. And we believe that the combination of actually food prices have started coming down. Even egg prices have started to collapse, as a matter of fact. Gasoline prices are coming down. We're seeing some rent prices coming down. So we think inflation is going to surprise on the low side of expectations for those reasons, and because innovation is inherently deflationary. And our 5 innovation platforms are all driving different kinds of deflation, good deflation, which will cause unit growth, but deflation nonetheless. So we think the Fed is going to have many more degrees of freedom in the second half of this year than most people think. We could see more than the number I just suggested, 2 to 3. Well, I think the Trump family is very supportive of crypto, which is great. It's completely different from the environment we had been in. Our view on meme coins, we're not as focused on them. We would not be putting them into our various private funds. Because, and I think that the combination of AI and blockchain technology is creating millions of these meme coins. We think most of them are not going to be worth very much. We think there are just going to be a few crypto assets that will gain most of the spoils in the entire ecosystem. Well, I think that the SEC did a very important thing in declaring these meme coins not securities. What they essentially were saying is, we are not going to regulate them, and it's buyer beware. And so if I have one message for those listening who are buying meme coins, buyer beware. And I think the message is loud and clear from the regulators. What we think will happen is there will be some fearsome declines in the prices of some of these meme assets. And, there's nothing like losing money for people to learn. And they'll learn that the SEC and regulators are not taking responsibility for these meme coins.
As concerns about the growing debt and financial risks of MicroStrategy continue to mount, the aggressive Bitcoin strategy that the company employs is coming under increasingly close scrutiny. As a result of having a debt that is due to be paid off in 2027 that is worth $1 billion, and having a negative free cash flow, analysts are raising concerns about the company's ability to continue operating in the future. The company has recently introduced a new perpetual preferred stock offering, which has been dubbed STRF, or Strife, in order to raise cash. This move, which some industry experts consider to be a desperate attempt to shore up liquidity, was made. Even though it is under constant pressure, MicroStrategy continues to make aggressive purchases of Bitcoin. However, the company's $43 billion worth of Bitcoin holdings could become a liability if it were forced to sell them, which could potentially set off a downward spiral in both the stock price and the value of Bitcoin. Due to the high stakes involved in this gamble, there has been a lot of discussion about the long-term viability of the company, as well as its capacity to handle the risks of dilution and financial strain.
That the millions of meme coins will probably end up worthless. So when we're talking about the big three, we're talking about Bitcoin, Ethereum, Solana. The use cases for those are multiplying. And we think they're going to become very important in the years ahead. Meme coins, not so.
What about Trump's meme coin? Is that one of the ones that you think will become worthless, Cathie?
It's interesting. The meme coins will be collector's items. So digital collector's items. And so, of course, some will withstand will withstand the judgment of time, and that may be one of them. But our working assumption is that when you're talking about millions of meme coins, that that's just a step too far, and that most of them are not going to be worth very much. I actually think it's very complicated, but in terms of our own venture fund, and we did start an interval fund, which is a 40 Act fund. I mean, we could see tokenizing that, putting it on chain, and enabling many more people to get involved with the private world. And I think other venture capital firms could do much of the same thing. I do agree there's going to be a lot more competition, a lot more ways to fund new companies. So that is true as well. So I'd say this new world's going to be complicated. When we hear Larry Fink of BlackRock saying he wants to tokenize everything, it's big, because it takes a lot to move the needle at BlackRock. So we're watching the tokenization movement very closely for our own purposes as well. Well, our main thesis for both is we're looking for the winners in the digital wallet space. Most of us are not going to have many wallets. You can think about this in the same way you think about credit cards. most of us don't have very many credit cards. So we're looking for those winners. And, Robinhood and Coinbase are coming at this from different angles. Of course, Coinbase from the crypto first angle, and Robinhood from more the equity end of the spectrum. Both of them have to. Robinhood has nailed the user interface. I think Coinbase is putting a lot of effort into getting that right as well. So we're looking at them as two of the bigger winners. Well, I think what is happening with the stablecoin movement, which again, we're going to see deregulation and legislation this year, we think, which will open the doors to stablecoins. So USDC, that's Circles, USDT, that's Tethers. That's the on ramp into DeFi, decentralized financial services. So you're already seeing lending and saving and yield harvesting taking place on these ecosystems, which are supported by Ethereum and Solana. And of course, you're seeing wrapped Bitcoin on Ethereum as well. So Bitcoin's trying to get into the game. But in terms of real utility, if you go to emerging markets, and I know this is not this market, but you go to emerging markets where their currencies destroy purchasing power and wealth with massive devaluation. So it's really their policy leaders. They are using Bitcoin in particular, but also stable coins, which is effectively the dollar, as backstops to their purchasing power and wealth, because they've been through too many of these devaluations. So I think the real utility, if you're looking at stable coins and Bitcoin today, is in the emerging markets, really protecting consumers' purchasing power and wealth. Yes, it is our view. I think right now we're in a risk-off period generally. And if you've been watching Bitcoin, it's almost been a leader in terms of risk on, risk off. So I think that's what we're seeing. If we look at our on-chain analytics, what we see is, I'm sorry, I have to get this off. If you look at our on-chain analytics, what you will see is that we are in the middle of, we're a little bit more than halfway through a 4-year cycle. We think we're still in a bull market. And we believe that the deregulation that we're seeing here in the United States is going to be very important to institutions moving into this new asset class. Asset allocators have to have a point of view on this new asset class. And we think by putting it in portfolios, risk-adjusted returns for the entire portfolio will go up.
The sentiment of investors regarding Bitcoin is showing signs of improvement, which is being fueled by the alleviation of concerns regarding inflation in advance of the meeting of the Federal Open Market Committee, FOMC. Following a downward trend that lasted for 2 months, the price of Bitcoin is currently approaching $84,315, and analysts believe that it may eventually return to the psychological level of $90,000. As the chief executive officer of 10x Research, Marcus Thielen points out, oversold conditions have the potential to spark a rally, particularly if the Federal Reserve adopts a more dovish stance. It is possible that the Federal Reserve will be able to provide the liquidity that is required to support risk assets, such as Bitcoin, if they adopt a less aggressive approach to tightening monetary policy. On the other hand, if concerns about inflation continue to exist, the recovery of Bitcoin could be hampered. As investor anticipation continues to build at a rapid pace, the upcoming meeting of the Federal Open Market Committee, FOMC, is of critical importance. Analysts predict that the outcome could have a significant impact not only on Bitcoin, but on the entire risk asset market. Thanks for watching.